Hello everyone, welcome to our live session today with Peter. So Peter, what's new in the markets?
Well, we had the US dollar, which remained rather stable. It was unimpressed practically by some Fed officials which made some comments about monetary policy. We had New York Fed President Williams, which more or less stated that there will be no rate cut in the coming year. So that would imply that interest rates are to remain high for a prolonged period. At the same time, we had also Richmond Fed President Barkin, who stated that more or less the bank will do whatever it takes to actually bring inflation down, and that's the main focus for now. At the same time, we also had a US consumer confidence which came out better than expected. Yet overall, that tended to fail to provide some support for the US dollar.
How have US stock markets reacted?
US stock markets practically dropped. We had all three main indexes, the Dow Jones, S&P 500, NASDAQ, all three of them were in the reds. Practically the prospect of a tighter monetary policy on behalf of the Fed does not bode well with US stock markets. So whenever we have such comments, we see that investors tend to withdraw, and that tends to bring some bearish tendencies in US stock markets. We expect that to be continued, given that most probably Fed officials will be sticking to the Fed's hawkish script, practically intensifying worries about the monetary policy tightening, which more or less could deepen the crisis in the US economy, or if you prefer, the recession in the US economy. And definitely that's going to be bringing less business opportunities and less opportunities for profitability. Something like that could be reflected also in the earnings reports for quarter 3 and quarter 4.
How about gold prices?
Gold's price had on display once again a negative correlation with the US dollar, but overall, despite the USD remaining rather stable, we saw that gold's price tended to weaken further. And that may have been also a result of rising yields, or if you prefer, yields at rather high levels, given that gold is a precious metal which does not bear any interest. On the contrary, bonds do, and at the moment may be presenting a more lucrative alternative as a safe haven. Also, let's not forget that gold is denominated in US dollars, so any strengthening, and as long as the US dollar remains at or near 20-year highs, could have a bearish effect on gold.
I heard that oil prices dropped yesterday. What's the big picture?
That was a big surprise. And look, the big picture here is that we have on the fundamental a worry, market worry, or a fear, if you prefer, that the tightening of monetary policies is going to be reducing economic activity across the board. So practically that could weaken demand for oil, thus lowering its price. At the same time, we note also that yesterday we had the release of the AP weekly crude oil inventories, and they showed a slight increase of inventories of about 500,000 barrels, and that tended to imply that there may be a slack in the US oil market. At the same time, though, I would note that the same release, the AP, showed that there was a substantial drawdown in gasoline stocks, and that could drive demand for crude oil higher in the coming days. So the combination of the two tended to create the worries of the market for the demand side of the commodity, and thus lowered its price. It's characteristic that oil prices dropped almost $7 yesterday. It was a substantial drop. It recovered a little bit during today's Asian session, but not much. We see that later on in the technical analysis as well.
What's on the calendar for the day?
We have a high number of financial releases today. I would be highlighting practically Eurozone's preliminary HICP rate is expected to tick up from 8.9% year on year to 9%. Mind you that Germany's HICP rate for August, which was released yesterday, accelerated as was expected from 8.5 to 8.8% year on year. And that could be pushing inflationary pressures in the Eurozone as a whole as well. Should there be an acceleration, we may see the pressure on ECB increasing to tighten its monetary policy at a faster pace, thus implying probably a 75 basis points rate hike in ECB's next meeting. So that's the important release in the European session. In the American session, I would be noting the release of the ADP employment figure. And the importance of the release relies practically on the fact that on Friday we have the release of the US employment report with the NFP figure, which are closely or considered to be closely linked. They are not actually, but nevertheless. And the release is expected to show a rise of the ADP employment figure up until 300K, which is a substantial rise and could provide some support for the USD. Other than that, I would be moving to the Asian session tomorrow. And in the Asian session, we have final manufacturing PMI figures. They are for Japan and for Australia, but the highlight, in my opinion, would be Australia's capital expenditure growth rate for Q2. It's expected to rise substantially, reach 1.5% month on month. And that could imply, if it actually accelerates as forecasted, that could imply practically that Australian businesses do have the confidence to actually invest in the Australian economy. That could be providing some support for the Aussie here.
How about the monetary front?
Well, on the monetary front, we already mentioned yesterday's statements. Today we have Cleveland Fed President Mester in the American session. And in the early Asian session tomorrow, we'll be having Dallas Fed President Logan and Atlanta Fed President Bostic. Overall, given the speeches and the statements made by Fed Chairman Powell on Friday and yesterday by New York Fed President Williams and Richmond Fed President Barkin, we tend to expect that most probably the statements will be tilted towards the hawkish side, which, if actually so, could provide some support for the US dollar.
Thank you, Peter, for today. Stay tuned for our next live session with Peter.
So, welcome to the technical analysis part of the presentation. Promise is a promise, and in front of your screens you have WTIs for our chart. All charts which are to be presented, unless otherwise stated, are to be in the 4-hour time frame. Now, regarding WTI, we had yesterday a substantial drop, around $7 as we mentioned in the fundamentals. I would highlight not only the drop as such, but the fact also that the upward trend line has been broken. So practically we would change our outlook for the commodities price. But before we discuss anything, let's make the necessary corrections regarding supports and resistances. Definitely the 92.60, given that the price action has moved decisively lower, is going to switch its role from a resistance line, from a support line to a resistance line. And let's go hunting for a new ultimate support line. So we have a level here, nice touch here, and there's a resistance line here, aimed for here. Seems pretty solid. Let's keep this. It's at 77.45, and it's our new ultimate support line. Let's lock this in, make the adjustments on the labels as well. Second, first resistance line. Okay, let's make a start. Ultimate bullish resistance level would now be placed at 106.30. Second resistance line being placed at 100.65. First resistance line is the 92.60, which used to be a support line, but given that the price action has moved below it, turns now into a resistance level. First support line is being placed now at 87.20. Given the movement yesterday, I wouldn't be surprised to see it being reached today. Second support line being placed at 82.60. And final support line being placed at 77.45. Let's make some comments here. The new chart. Okay. Definitely we have a strong downwards movement. The breaking of the upward trend line signals that we have a change in trend. The question is, are we about to move in a sideways manner, or are we about to move in a bearish outlook? On a technical level, given that the RSI indicator is moving decisively towards the reading of 30, has not reached it yet, that implies a bearish sentiment. Also, given the correction which was made during today's Asian session, allows us to start drawing the downward trend line. Let's touch it. Here it is. It's pretty fresh. And on the other hand, we have to note here that the price action has actually breached the lower Bollinger Band right here. So practically that could imply some kind of stabilization or a slowing of its drop. More or less could show some stabilization, but overall the bearish outlook seems to be present. Let's drill down to the 1 hour chart to have a clearer look. The last 3 hours have been pretty destructive here for oil price, for WTI's price. Excuse me. So, for the time being, I tend to maintain a bearish outlook, and as long as they remain below the downward trend line we have just drawn. Should that be the case, I wouldn't be surprised to see the price action dropping, breaking the 87.20, maybe even lower. Start aiming for the 82.60. 87.20, which provided support a number of times around the beginning, the 5th to the 11th of August. On the other hand, should the price action stabilize and break the prementioned downward trend line, that would be a signal that the movement now turns into a sideways motion. For a bullish outlook, I would require a clear breaking of the prementioned downward trend line, definitely a breaking of the 92.60, and the price action to start actively aiming for the 165. For the time being though, we tend to maintain a bearish outlook for WTI's price, albeit some stabilization could occur. Okay, let's go back now and have a look at USD index. Once again, the 4-hour chart. The US dollar index, which was testing just about now, once again, the 109 resistance line, and seems to have a sideways motion, quite low volatility, given also that we have the Bollinger Bands, which have narrowed and converged. The importance of the movement, in my view, relies practically on the breaking of the upward trend line, which was guiding the pair since around the 9th, 10th of August. Sorry, the index, since the 9th, 10th of August. And that is a display, in my opinion, that the price action has stabilization tendencies, actually has stabilized already just below the 109. For the time being, I tend to maintain a bias for the continuation of the sideways movement. There would be a mid-level, which would be interesting to see, somewhere here. See the touches, 1, 2 touch. So there could be a mid-level at 107.95. It's a very narrow range though for oil's price. Sorry, for USD index. For a bullish outlook, I would require clear breaking of the 109 resistance level and the price action of the USD index to start actively aiming for the 111, maybe even touch it. We're talking about 200 ticks here. Mind you, on the other hand, that the level is practically 20-year high. You can see that in the monthly chart. And that may make the case for the bulls a little bit more difficult, as practically there would be some hesitation among buyers. On the other hand, should the bears take over, I wouldn't be surprised to see the price action reversing, breaking the 107.20 and start actively aiming for the 105.55. I know it's pretty wide, but definitely the breaking of the 107.20 is possible. For the time being, once again, the sideways motion is expected. Note the slight bullish tendencies. It's characteristic that the price action of the US dollar index is repeatedly testing the 109 resistance level. It's very, very characteristic. Also note that the RSI indicator, just below our 4-hour chart, has jumped after bouncing on the reading of 50. It's currently at 58. So there are some bullish tendencies as well here. But once again, for the time being, as long as the price action has not clearly broken the 109 and starts aiming for the 111, I maintain a bias for sideways movement in the coming day. Let's have a look at EURUSD. EURUSD, which has dropped during today's European session. It's very characteristic in the past 3 hours, yet seems to be recovering some ground. Interestingly enough, I would like to see the reaction of the market on the release of Eurozone's preliminary HICP rate. It accelerated slightly more than what was expected. Let's have a look. This is the minute chart. And at 12 o'clock, we had a slight volatility here. That was the moment of the release. So not much, but that seems to be an upward movement, correction, which is to correct the downward motion it had from around 11:20, that's GMT plus 3. And that was up until 12 o'clock. You can see that at 12 o'clock it stabilized and started an upward movement. So there seems to be, for the time being, a slight positive effect for EURUSD from the release, or if you prefer, the acceleration of the preliminary HICP for August for the Eurozone. Okay, but let's make the necessary corrections for now. Definitely, parallel level is to become once again a resistance line. Note that we have a sideways movement with some bullish tendencies here, but we'll make a comment on that later on. Let's go hunting for a new support line. However, that would be placed at 0.97. Let's change the labels as well. And the final. And we're going with the new ultimate resistance level being at 1.02. Second resistance line being placed at 100.95 with the testing here and here. First resistance line being placed at parallel level, which used to be a support line, given that the price action has moved below it. Now switches its role into resistance line from a support line. Second, or if you prefer, first support line being placed at 0.99. Beautiful touch here. Second resistance line being placed at 0.98. And final support line, being placed at 0.97. Locking all the labels in. We're ready. So the price action of EURUSD seems to have interrupted the downward motion it had from the 11th of August up until the 26th of August. So we tend to maintain a bias for a sideways movement of the pair. Note though that there are some higher lows being marked, which may imply some slight bullish tendencies. But the main direction for the time being seems to remain sideways. It's characteristic that the price action wobbles around parity level for the past 24 hours, if not more. Actually, since the 29th of the month. We would expect it to be maintained. For a bullish outlook, I would require a clear breaking of parity level to the upside and a testing, if not even a breach, of the 1.0095 resistance level to move somewhere here. In a downward motion, and should the best take over, I wouldn't be surprised to see the price action of EURUSD dropping, initially testing 0.99 and breaking below it. That may also be a prerequisite for a bearish outlook. The RSI indicator seems to be revolving around the reading of 50, also implying a rather indecisive market, enhancing our outlook for a sideways movement of the pair. Okay, let's have a look now at GBPUSD cable. Cable which, in contrast to EURUSD, seems to have some bearish tendencies. We'll discuss them later on. Let's make the necessary corrections. For the time being, it seems to have broken below the 1.1645. Let's turn this into a resistance line. Albeit we could leave it as a support line until it is clearly broken. But nevertheless, since we're here, let's do it. And let's go find a new ultimate support line. Oh, we're going to have to drill out to the weekly chart. Nothing monthly. Oh my god, that's a low. So we haven't had such low levels since 20 years ago, 21 years ago, and more. That's pretty low. Let's drill back down to the 4-hour chart. There seems to be an intensification of the downward trend line. Definitely the downward movement, which was incepted since the 10th of August, seems to be maintained. So the bearish outlook is still present. There may be even an intensification of the downward slope with these touches here. On the other hand, though, I would put also in a factor of uncertainty, given that the price action has more or less, let me correct this, has more or less started to stabilize, given that the price action shows, or if you prefer, has a lack of showing lower truths. Yeah. Let's make the necessary readjustments. 1.1114, sorry, 1140, 1.13, 1.1450, 1.1645, 1.1755, 1.19, the final resistance line. Small recap to make things clear. So, A, we tend to maintain bearish outlook for cable. There is once again one note of hesitation, the fact that the latest true seems to be higher than the previous one. So that tends to imply that there may be some hesitation under the bears, understandably, given that the pair is moving now in 20-year lows. And that's an issue which could put some obstacles ahead for the bears. Nevertheless, should the bearish movement be maintained, we may see the price action starting to aim for the 1.1450. A stabilization of the pair could be signaled should the price action rise slightly, break the 1.1645, and definitely we would require clear breaking of the prementioned downward trend line. However, that stabilization could prove to be temporary. Nevertheless, for the next 24 hours could be valid. And I would expect it to remain between the 1.1755 resistance level and the 1.1645 resistance line. On the other hand, a bullish outlook would be signaled initially by the breaking of the prementioned downward trend line. Yet I would require for a clear a clear upward movement, which would be breaking also the 1.1755 and start testing for the 1.19. Now, I know some of you guys may consider this to be quite wide. However, there is a clear example where the price action of cable was able to drop from 1.19 to 1.1645. That would be 263 pips, 65 pips within 1 day. Easily. Actually, half a day. No, 1 day, sorry. Yeah. So it's something which is doable. I wouldn't be surprised, say, for example, if the bears take control over the pair to see it testing the 1.1450. That's 200 pips, almost. On the flip side, should the bulls take over, I wouldn't be surprised to see the price action jumping 200 pips. And such a rise would practically break A, the first downward trend line, B, the second downward trend line. For the time being, though, once again, bearish outlook, given that we have an RSI indicator which is running along the reading of 30, implying a rather bearish sentiment in the market. Also note that the price action remains encapsulated for the time being between the mid-level of the Bollinger Bands, that's the 20 moving average, and the lower boundary of the Bollinger Bands. Also note the direction of the Bollinger Bands is downwards. Also, the direction of the 100 moving average and the 200 moving average is to the downwards, and the 100 moving average is even slightly diverging to the downwards than the 200 moving average, which provides a smoother picture. Let's have a look at USDJPY now. USDJPY, which seems to have stabilized, but there may be some bullish tendencies given that the price action of USDJPY has been moving in scales. You can see one scale here, sideways movement, upward movement, sideways movement, upward movement, sideways movement. The question is now whether the pair will actually bounce on the upward trend line and, or even earlier, and break the 139.40, start aiming for the 141.50, or whether it's going to continue to stabilize between the 139.40 and the 137.45. It's quite high. It's not the highest level yet, but pretty high. So it's an obstacle for the bulls, which should not be underestimated. For the time being, though, I wouldn't be surprised to see it stabilize until its next step higher, if it occurs. On the other hand, should the bears take over, I wouldn't be surprised to see the price action dropping, breaking the pre-mentioned upward trend line, breaking the 137.45, that would be a prerequisite, and aim clearly for the 135.55. For the time being also, I would be noting A, the RSI indicator, which is above the reading of 50. Actually, it's currently at 63, which tends to imply also a bullish sentiment on behalf of the market. On the other hand, I would also note the Bollinger Bands, which seem to have an upward motion, yet on the other hand have started to converge, more or less implying less volatility for the safe haven currency pair. Okay, let's have a look now at the older safe haven currency pair, namely USDCHF. USDCHF, which moves in a decisively upward manner, tends to imply a weakening of the CHF, given that the US dollar remains rather stable, as we have seen the movement against JPY and the US dollar index. So that would be more or less a weakening of the CHF factor rather than a strengthening of the US dollar. Let's switch this. And the resistance line now becomes a support line. Let's see if we have The prime movements, here it is. Let's keep it low here and here. I'm keeping this. That would be parallel level. Oh, it's too high, sorry. $0.9975 in red. It's quite possible. Yeah. Let's make the necessary adjustments. 0.9975. Let's readjust this one again. Wider look. Second resistance line being placed at 0.9880. First resistance line, which is about to be tested, actually pretty close, 0.9785. First support line being placed at 0.97. And the second support line being placed at 0.96. Final support line, sorry, that would be 0.9610 to be more exact. And final support line being placed at 0.95. We tend to maintain a bullish outlook, that's clear, as long as the price action remains above the upward trend line. Also note that actually we had one upward movement which began around the 11th of August, stabilization, and that was from the 23rd up until the 30th of August, and today we have a new upward movement. So one could also draw practically an upward trend line starting here in this section. An upward motion is definitely supported also by the RSI indicator, which has jumped above the reading of 70. On the other hand, though, the fact that it jumped above the reading of 70 tends to imply that the pair may have reached overbought levels and may correct a little bit lower. Similar signals we are also getting from the fact that the price action has reached and breached the upper Bollinger boundary. On the other hand, note how the 50 moving average has broken above the 200 moving average, showing the acceleration of the rise. Nevertheless, should the bulls maintain control, I wouldn't be surprised to see the price action breaking the 0.9785 and start actively aiming for the 0.9880. On the other hand, should a stabilization occur, I would expect it to remain between the 0.9785, break the upward trend line we have just drawn, and the 0.97 support line. For a bearish outlook, however improbable it may sound, we would require a reversal of the direction of the pair, a breaking of the initial upward trend line, a breaking of the second trend line, a breaking of the 0.97, and the price action to start actively aiming for 0.9610, if not even reach it. Okay, let's move now to commodity currencies. Make a start with the USDCAD. USDCAD, which has been on the rise, interestingly enough. It has broken the 1.3075. Wider movement here. Now let's make the necessary corrections. Adjusting. Mind you, today we have the GDP rates of Canada. They are both expected to accelerate on a year-on-year, on a year-on-year and on a month-on-month level. Let's find a new resistance line. If we can find one. Okay. Here we are on the weekly chart. Let's see if we can find something in the daily. Nope. We have to drill it back to the weekly chart. And I would be choosing, there are choices, but they're pretty way back. Actually, no, they're back in 2020. We should have it in the daily chart. Let's have a look. Okay. I would be choosing this peak here. On the other hand, there's this level which used to be a support line. So that's not bad either. And it's been downhill. Yeah, I'm keeping that. Now it's slowly but steadily rising. Note how we have higher peaks here and here. And higher troughs here and here. And higher peaks twice. And now it's on its way up. Should be able to break above the R1. Beautiful chart. Once again, the daily chart. Let's move and drill back down to the 4-hour chart. Readjust. And that would be the 1 point in red. The 1.3485. Let's readjust the labels as well. Okay, we start with the lower support line, which is now being placed at 1.2830. The second support line, which is being placed at 1.2945. Third support line used to be a resistance line, given that it has been broken, has now switched its role. It would be the 1.3075. First resistance line now is being placed at 1.3220. Second resistance line being placed at 1.3350. And final resistance line being placed at 1.3485. Let me reconfirm this. Yeah, 1.3485. Sorry. We tend to maintain a bullish outlook for the pair as long as it remains above the upward trend line, which has been incepted since the 26th of August. Let me readjust it just slightly. And if that's the case, we may see the price action of USDCAD aiming for the 1.3220. Now we have here conflicting fundamentals. On the one side, we have oil prices which are dropping, and thus a weakening CAD, given that CAD has a positive correlation with oil's price usually. On the other hand, though, we have the GDP rates today of Canada. Both are expected to accelerate on a month-on-month and on a year-to-year level. and that could provide some support for the CAD, causing the pair to drop lower in the American session. It's going to be interesting to see how the market will behave on that, react. Once again, for the time being, a bullish outlook seems to be in place. And as long as it remains above the upward trend line we have just drawn. Okay, let's have a look now at AUDUSD. AUDUSD, which dropped during today's European session. Let's have a look at the daily chart. Note the wide drop yesterday and the relative stabilization today. Okay, this was the drop. But overall, the big picture in the 4-hour chart seems to be implying a rather sideways movement. Let's find a new support line just below. Yeah, here. There's a nice touch here and here. And the next one will be here. And we could keep this one as well. Nice touches here. Keeping this one. Okay, let's delete this. Correct this. In green. Name it 0.6760. Now turn to red. Second one also turn to red. Let's make the corrections. 0.6760. S2 being placed at 0.68. S1 being placed at 0.6840. Yep. First resistance line being placed at 0.6880. Second resistance line being placed at 0.6945. And final resistance line being placed at 0.6995. Sorry. New correction here. There you go. For the time being, we tend to maintain a bias for sideways movement. However, I would be highlighting the bearish tendencies of the pair, which are evident practically by the fact that the pair seems to be aiming or testing the 0.6840 support line on a continuous basis. Also note the RSI indicator, which has moved lower below the reading of 50, not much, but still it's right now at 42. And on the other hand, note how the price action seems to remain between the mid-level of the Bollinger Bands and the lower Bollinger Band as well. Also note how the China's Caixin manufacturing PMI figure for August, and most probably Australia's capital expenditure growth rate for Q2 is going to be affecting the pair during tomorrow's Asian session, yet the main driver may prove to be the US dollar once again. That should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.
Hello, my name is Christina, and today we will talk about trading psychology. When you trade, psychology is very important. Feelings such as excitement, anxiety, depression, denial, and belief play a key role to your trading success. In many ways, it has been shown that the way traders feel affects their trading performance. Since it is difficult to erase our emotions, the best way to deal with them in trading is by controlling them as best as we can. More generally, the overall investor sentiment can affect how the market performs, which can be inconsistent with the actual market news and events. But let's see in more detail how psychology affects the market. The way traders understand the market has an influence on the market itself. For example, if macroeconomic data is better than expected or the numbers are disappointing, then the value of an asset will move based on how the market's participants felt about it. Sometimes, even if data is positive, the value of an asset might not move, since the market's participant expected that and had priced in it. Any trend in the market very often reflects investor sentiment and how traders felt about it at that moment. The general market sentiment is what will also guide them to buy or sell. If they believe it will go up, then it will buy and vice versa. If there is an optimistic view of the market, then commonly there is an upwards trend. On the other hand, fear is usually associated with a downwards trend. As the market fluctuates, so do the traders' emotions. Traders may feel disbelief at the beginning of a trend and then feel hope for the market to recover. If the market goes up, then traders will begin feeling optimistic and then excited as they believe the rally will continue. If the market goes their way, traders may become greedy or euphoric. The opposite will also be experienced as the market starts to change and move downwards. At first, they might try to convince themselves then the fall is only temporary. But if it continues, then anxiety starts to settle in and perhaps denial, as they still may feel the market will recover soon. If the market remains weak, then traders may start to panic, withdrawing everything from the market and worried that they may lose what they have left. Finally, feelings of anger and disappointment will guide the market as it reaches further lows. Thank you for watching.
Hi everyone. Can you guys see me or hear me? Let me know in the comment box. Let me see. Okay. Give me 1 second. Hello. Let me adjust the mic in case. How about this? Okay, welcome to another IronFX webinar. Okay, I can see some of you coming in. So, hi Joha, hi Woyomi. Hello. Okay, just give the rest of the audience some time to come in before we start the session. So hello, I'm Annabelle. Today I'll be hosting the webinar series on mastering divergence in trading, right? Hey Terence. Hi. So it's a Wednesday, 6:03 p.m. now. Let me know where you guys tuning in from. It's Wednesday where I should be like chilling somewhere instead of hosting this webinar. Hi, Juhai. Okay. Finland, UK. Nice, nice. Okay, maybe we should start the session, right? Thank you guys for tuning in on a Wednesday, right? I'm Annabelle and I'm hosting the session today, right? Talking about divergence in trading. So how many of you guys have actually heard of or used divergence in trading? Anyone? Right. Okay, there are some response. Do let me know if you guys have any questions because I have another section on my left that I can see all the questions, right? So let me know. Okay, before we start the session, maybe just let me bring you guys to our IronFX VIP portal, right? So at IronFX, we have a special partnership with the EFG, Everest Fortune Group, right? So this is our newly set up IronFX VIP portal where you can chit chat and have a one-on-one discussion with our prop traders, with Desmond himself or anyone in the office, right? So right here, you can come here to post any questions or take a look at any setups that we have that we post here. So there are some news that we update every day, and the major pairs or whichever commodity, indices, crypto, right? So you can toggle around the VIP portal, right, by highlighting zones. For example, Jin, okay, one of our prop traders, right? Wait, let me try USDJPY because I just did this. Okay, so for today, for example, I actually came here to post some of my comments, right? Highlighting some key resistance area. Yeah. So if you have any questions, you want to say, oh, will there be a breakout? What you can do here is highlight the breakout and then you can link it to wherever you want to highlight. For example, this line here. So confirm and then you enter. So all of the in-house traders will be able to see what you have commented and will answer you as quickly as possible, right? Our opinions or where we see the market is moving. So this portal, especially for our IronFX VIP members, as you can see here, right? What you can do is to sign up. Let me just copy and paste the link for you guys. Hang on, just let me go to. Okay, you can either come to this page here to sign up. Right, we have different tiers. We have different tiers. Or you can go to the IronFX page, the VIP room right here, right, where you can see what the IronFX VIP trading room is for. So you get exclusive market forecasts. You can ask our experts, for example, Jean or Desmond himself, a one-on-one trading session, sort of. Make it more interactive of sort. Okay, you can request for market forecasts. And these are the tailored account types that you can go for, right? So for different price or different deposits, you get to access different tailored services from us, right? So yeah, please check it out. And also, if you want to see our past webinars, you can log on here to see past webinars, right? And click on English to see all the previous sessions that we have hosted. And for today's session, we are talking about divergence trading. It's also recorded. So if you miss out any part of this, you can actually log on to IronFX to check out, right? Okay, so without further ado, maybe I should start this session. Okay, so before I start the session, just a disclaimer. The information in this webinar should not be considered investment advice or an investment recommendation, but instead only educational materials only. So please do your due diligence before you trade. Okay, so that's me. Okay, Annabelle. So I am with, I'm working for Desmond in EFG. So EFG is finalist for Best FX Research 2019, 2020, 2021, and finalist for Best Equity Research 2020 and 2021. Okay. Okay, today's agenda on divergence trading. So like I've mentioned just now, how many of you guys actually have heard of or have used divergence trading? Okay, I have some response, right? Yes, it's a tool that you don't. Okay, yeah, some of you have raised your hands. Okay, that's great. Okay, okay, so it's a tool that you don't use it on its own because it's just additional support to confirm your reversals or to confirm your trades, right? Okay, I've heard of it but never used it. Okay, so this will be I'll keep this session as simple as possible because actually for divergence is a very simple tool to use. So the agenda for today, we'll be talking about what divergence in trading is, what are the indicators that you can use for divergence trading, the different types of divergence trading, and combining them for higher probability setups. Okay. Okay, so what is divergence trading? So divergence trading is when the price of an asset is moving in the opposite direction. So for example, I have a price, some of you might use a MACD. Oops. Some of you might use MACD. Sorry, let me erase this. It's a bit messy. Some of you might use MACD. Some of you might use your RSI. So these are all oscillators. So they are quite similar, or your stochastic, right? Depending on what you're familiar with, but the way they function or the way they move is quite similar. So divergence trading is when your price levels are going in one direction, for example, upwards, but the oscillator is telling you otherwise, right? It's going downwards. So it literally means diverge, right? So divergence warns the current price trend may be weakening, or in some cases, it may lead to price changing in direction. So in the following slides, I will show you guys the different type of divergence in trading, right? And for divergence, it's an indicator's way to tell you that there might be a reversal. So two key things that I want you to take note, meaning divergence in trading can mean reversal, or it could mean continuation. Okay, there's only two things that is trying to tell you. It's either a reversal point or a continuation, right? But it's not meant to tell you exactly where you should put your entry or where you should put your take profit or stop loss. It's just an additional tool to your maybe Fibonacci, etc. Right? The other different tools that you use for trading to set your entry or take profit stop loss. This is an addition to it, right? It's like a confirmation. So the different types of divergence, we have the bears and the bulls. Okay, I have some question. Can't see your screen. Oh shoot. Sorry, give me one sec. How about now? Can you guys see my screen? Hello, hi. Can you guys see my screen or is it just me? Still not sharing? Okay, how about now? Hello. Oh dear. Okay, so you guys can see me, can see my screen now? Okay. Oh my God, I'm so sorry, guys, because I thought Desmond already said it for me. Oops. Okay. But luckily, we haven't gone to any of this part yet. So this is the important part that we should be taking note of. This is more visual. So, okay, let's start. So the different types of divergence, we have the bear and we have the bull. Okay. So for bullish divergence, we are always looking at prices that touch the lines from the bottom. Okay, so we always draw the line this way, right? It might be a bit confusing because when I just learned it, there are 6 of this that you have to sort of remember, but the key would be this 4. Okay, the exaggerated divergence is a bit not as effective or not as strong. So I would recommend that you just memorize these 2 categories, which is a regular divergence and the hidden divergence. An easier way to remember is I will separate the bullish from the bearish. So bullish, we always draw our lines at the bottom of prices, right? As you can see here, it's always at the bottom for bullish. And then from the top, if it's bearish. Okay, but these are the 4 that you have to remember. Bearish regular divergence, bullish regular divergence, hidden, and hidden bearish divergence and hidden bullish divergence, right? These are the 4 important ones that you remember, because for exaggerated divergence, it's not so effective, but I do have some examples that I can show you guys later on, right? So let me explain further in details what are these. Okay, so I've came up with this chart to make sure that it's clearer for all of you to understand, right? This is the price level for the asset, meaning the price of the candles, right? And this is the level for my oscillators. Okay, sorry, it's a bit messy. Okay, so this is my price level for the chart, my normal candlestick charts, and this is the for the oscillators. So in case you are confused, so this is the normal price, the asset price, and this is the oscillator price. Okay, so remember for bullish, we are always looking at your price being drawn on top, right? Your line is always below. Okay, maybe I use below. Your line is always drawn below for bullish. Okay, be it this or this, right? So bullish, always remember your line is always at the bottom. Okay, and what I mean by that is it will create a lower low on the price. So this is my candlestick chart, and then a higher low on my oscillator chart. So for the purpose of this webinar, I have all used RSI as my indicator, my oscillator. So if you're more familiar with MACD or your stochastic or whichever you want to use, please go ahead because they move in similar manner. So what I mean by draw your line below the price, meaning to say your price is always on top, right? So the line is below, creating lower low, and on your oscillator, higher low. right? What it means that the underlying, it indicates underlying strength, right? So it's stronger. So what we are looking at here is for price to reverse in the other direction. Okay, price is moving this way, creating a lower low. And then your oscillator is telling you that, hey, I'm actually moving in an opposite direction. Maybe it's time to reverse, right? So it's a reversal. Bears are exhausted, warning of possible trend direction trend direction. Sorry, I'm tongue-tied. Trend direction change from a down to an uptrend, right? As for bearish, your line is always drawn on top of your price. So it creates a higher high, right? And your oscillator, a lower high. So higher high, okay, on your price chart, and then lower high on your oscillator. So it shows that, hey, maybe my price is going to break. It's going to go in the opposite direction, right? So it's a bearish divergence, regular divergence, this is called. Okay. Most of the time, from all the past tests that we have had, most of it are regular divergence, right? And the next one will be hidden divergence, which is not so common, but regular is the most common. So what does a bearish divergence tell you? It indicates underlying weaknesses. So bulls are exhausted, warning of possible trend direction change from up to downtrend. Okay. So this is for reversal, regular divergence. All right. Just remember it as reversal, right? So lower low, higher low give you bullish. Higher high, lower high give you bearish. But these are both for reversals. Okay. Am I clear? If you guys have any question, please feel free to ask me because I have the other chat open. Okay. Yeah, I'll try to keep this as simple and slow and understandable as possible, right? Okay. The second one, the hidden divergence. So for hidden divergence, we are looking for continuation. Right? If this would be reversal, then this would be hidden divergence. But I can't find any relation with these two words. So just remember that regular divergence equal reversal. Hidden divergence equals to continuation. Oh, sorry. If you guys want to take a photo of this, you can go ahead. So this chart, I have done it so it's clearer for you guys. Maybe I can. Okay, never mind. Okay, so this is for oscillator. Please take a snapshot if you need. Oscillator, and then this is your normal price. Your asset. Maybe I'll just write asset. Okay, so in case you guys forget, right? So this lower low is for your asset at the top of the screen. Later I will show you guys. Usually your top is your normal price and then below will be the oscillator, right? Higher low will be for the oscillator. Same goes for this. So please take a snapshot if you need to. Yeah, have a sweet. Okay. Next, hidden divergence. If you need to, take a photo as well. So like I've mentioned, hidden divergence would be for continuation. Okay, meaning to say for bullish, remember your line, your trend line is always drawn from below. Your trend line is always drawn from the bottom for bullish. Okay, let me highlight again. Bullish trend is always drawn below. Bearish is always drawn from the top. Okay, so for bullish hidden divergence, it means that it's creating a higher low, right? Higher low, and then your oscillator is creating lower lows. Okay, higher low and lower low. But in this sense, in this manner, it's actually looking at a continuation. So you can see here, although my oscillator is telling me otherwise, it shows me how my trend is still continuing. So it's an additional tool that I can use with my other indicators like my retracements to let me know that, hey, my trend is going to continue instead of breaking here, right? Because right at this point, for example, for example, a lot of people might be thinking, oh, is creating maybe somewhat a triple top. Is it going to break here? Okay, some of these questions might pop up here. But with the oscillator, it's actually telling me that, hey, I have a support that is telling me that my trend is actually going to continue in a bullish manner, right? For bearish hidden divergence, we are looking at lower high, as you can see here, lower high, lower high, lower high, and my oscillator is telling me higher highs, higher, 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 right? So what these indicate is that for bullish hidden divergence, it's indicating strength, good entry or re-entry. So this occurs during retracements in an uptrend, and it's nice to spot during retest or previous lows, right? And here, same, indicates underlying weakness found during retracements in a downtrend. Nice to spot during retest or previous highs, right? It's a continuation trend. Okay. Okay, some tips that I have before I show you guys some examples on divergence trading is that for divergence to exist, price must have either formed a higher high, a lower high. Let me go back to my slides. Okay, here. Okay, so it must either form a higher high, a lower high, a double top, or double bottom. One of these must have happened before there is a divergence, right? So you don't have to rush in if you don't see it because it doesn't often occur. Okay, so make sure that they are drawn correctly. Later on, I will show you guys some examples of how to draw a basic divergence line. So keep price and your indicator swings in a vertical alignment, meaning to say if I have a bullish divergence, right, I will be looking to draw my, for example, this is a price. Okay, you have to draw in alignment, meaning this section instead of, okay, my drawing is not that great. Maybe I'll show you on the charts instead. Let me pull out my charts. Okay, for example, if you're looking at a divergence, make sure that it's always in alignment, meaning to say here to here and here to here, right? It's always in alignment. It's always starting and ending at the same point. Not like this. This is a bad example, right? You have your price here and then your divergence is here, or maybe your price is here and then your divergence is here. It doesn't make sense, right? So it always have to align correctly like this. It always have to start and end at the same time. So this is what I meant by alignment, okay? And then Divergence also, if you guys are asking on which time frame it works well on, it usually is more accurate on longer time frames, meaning to say my H4 or my daily. But as a day trader, I don't think, or a scalper, I don't think you'll be using such high time frames. So my recommendation would be to use H1 onwards, because if you are going to do your divergence trading on a 5 minutes or 50 minutes, there will be a lot of divergence there, which might not be so accurate. So for longer time frames like your H4 and your daily charts, you get fewer false signals, right? Divergence on shorter time frames will occur a lot more frequently, but they are less reliable. So we advise 1 hour or above, right? Some traders use 50-minute charts or even faster. So in those time frames, there are just too much noise for us. Okay, it is very hard to trade on those time frames. Okay, so let's move to our examples. Okay, maybe I should test you guys. Okay, so for can you guys tell me what is this? Is this a bullish or a bearish divergence? Okay, never mind. Is it a regular or a hidden divergence? This way. I'll give you a hint. You always draw your line, your trend line below for your bullish. Okay, your bullish divergence, right? But now my question is this a bullish or is this a regular divergence or a hidden divergence? So is this a reversal or is this a continuation? I have a couple of answers. Most of you guys say hidden, okay? Right? Is this hidden or regular? Right? Okay, so my refresher, if it's at the bottom, it's always bullish. Okay, that's the easiest to remember. So under bullish, there's only two types, either your regular or your hidden. So open is always hidden, right? Your regular is closing. And for bearish, your trend line is always drawn at the top. So for hidden, it's closed. And then for regular, it's open. So this one is the opposite. It's slightly confusing, but you just have to memorize it, or you can have this chart paste somewhere on your trading platform or somewhere where you can refer, right? So those who say hidden, yes, you're correct. So let's move to my examples. Okay. Okay, so here, right here, remember my number one rule is always to draw in alignment, right? Your price and your oscillator must be in a correct place. So price is testing a key horizontal resistance level, which is here. Okay, my drawing. Okay, so it's drawing a key resistance. It's testing, sorry, a key horizontal resistance level with price making a smaller high. I don't know whether you guys can see it, but it's from here to here. So one is below the dotted line and one is above the dotted line. It's a slight inclination, okay, if you can't see, but that's what they are portraying, upward trend. Okay, it's just trying to show you that it has moved from here to here, okay, resulting in bearish divergence with RSI. So this is the RSI indicator, our oscillator. Our descending resistance line on RSI caught the past two reversals correctly. So it forecasts that we could be seeing a reversal here, right? So this is a bearish divergence that we are looking at. One is open. Okay, so this is an open bearish divergence. Okay. So what they're trying to show you here is that there might be a reversal because we have caught 2 points here and then it's going in the opposite direction, right? So it's a sign to show you guys that, hey, actually it's going to reverse from here, Usually where you should take note is at the opening and the closing. Okay, usually the closing, because you have to think of how you want to take your next trade, right? Especially when this is a reversal tool that you should use, that you can use. So other than this, sometimes you can throw in your other indicators, like maybe your retracement tool to see how far it went. Maybe you're looking for a projection, or maybe you're looking for an extension or expansion, right? So for reversal, for divergence trading itself, it's an add-on, it's a additional support to your entry, or additional support to your thesis, where maybe, for example, you feel like the price here should have reversed, but you are unsure whether it will continue or it will reverse. So this divergence trading will help you to add maybe the 10% or 20% that you need for confirmation, right? Okay. So repeated divergence, what they mean by repeated divergence is, as you can see here, the price is going up and then my oscillators is telling me otherwise. So this is a bearish divergence, right? Price reverse. And then I have another bearish divergence, right? You will be thinking that, hey, maybe the price should come down. Yeah. So price came down. Okay. So repeated divergence means, it just means that price repeatedly reverse, and it usually tends to be stronger on the second time, on the second repeated divergence. Okay. Okay, divergence potential. So what we mean by divergence potential is, you might be wondering how far my reversal might go. Okay, as an indicator itself on its own, it wouldn't tell you where it will go, right? It could actually potentially go here. I wouldn't know. So using the divergence trading skills, it won't tell you exactly how far, but as a rule of thumb, most of the time, it should come back to where we started. Usually, but not all the time. If you can actually put this together with your retracement or your other indicators, your projection, or your other indicators on the RSI, it will work better, right? Or maybe your trend line, your support resistance line, throw in all of that to give you the additional support to make sure that your take profit or stop loss is correctly placed, right? So always take note of where the bearish divergence starts, as this is the level where it would tend to reverse to. So for all our previous back tests, or those that we have tried, it tends to move towards yes, where it started, right? Or the previous swing low or swing high. Okay, so right here you can see the bearish divergence here to here, and then here to here. So price is going to reverse, right? So just now they mentioned that your price usually comes back to test where it starts from, where your divergence starts from, right? So it came back here to test. Price reversed to where the divergence started to occur. Okay. Yeah, so this is one of the questions I had, is because for example, if we are looking at, let me go back to the slides. So for example, if we are looking at our exaggerated divergence, right? Because the question is, how far is my reversal or my continuation going to continue to, right? That's usually the question. But if it's an exaggerated divergence, you wouldn't know how far it will go. So right here, how far it will go depends on other indicators like your resistance line, your support line, right? What's your trend line? Your fibs, your expansion, projection, all this add together, okay, to show you how far it will go. Because exaggerated divergence, you will never know how far it will go. In essence, exaggerated divergence actually means double top and double bottom, as simple as that. And one point to also note, for this is special because it can only happen in this scenario, meaning to say, if I have a double top, right, I'm looking at my oscillator only this way, only on the bearish signal. And if it's a double bottom, I'm looking only at my oscillator being bullish, sorry, because it can't happen when this, for example, one of the question I had was, it can't happen if my oscillator is going upward, correct? Because this is for bearish, right? So this is my bearish exaggerated divergence. It can only happen if it's going downwards. It can't happen if it's going upwards, right? Okay, so take note, it can only happen in these two scenarios. Okay, so maybe let me continue. Yeah. So back to what I was saying. Usually the question tend to be, how far will the reversal go, right? So it tends to come back to test the level where your divergence started to occur. Okay, it can be on your H1 time frame, your H4 time frame, or your daily. Okay. Okay, so forecasting breakouts with divergence. So what they mean by forecasting breakouts? So sometimes if you're, for example, if your trend is very strong, like your USDJPY, right, is always constantly moving outwards, and then you must be wondering when your price is gonna break this to come down, correct? But you always have this question in your head. Whatever goes up must come down. So the key is when and to how far it will come down. So what we have here is our RSI telling us that, hey, we have a bearish divergence. And then my price has actually broken my trend. So usually it is better that it occurs at the asset level instead of the oscillator, meaning to say, it will be better if the prices of the asset shows that it broke instead of the oscillator. Okay, either one of them, so long as one of them breaks and is showing bearish divergence, it's telling you that, you know, price is going to reverse. So forecasting breakouts is when one of the price, either your oscillator or your asset price, shows you that, hey, I actually break out of my trend or my channel. Okay, so either one of these shows you that, and it's actually telling you that, hey, I have a bearish divergence, then it will reverse, correct? Because sometimes the problem is also, if you do not have this RSI, for example, we ignore this. Okay, we ignore this RSI and then we just solely look at the price level. If my price actually came here and broke slightly, okay, maybe I'll use a highlighter instead. Okay, if my price came here and first candle, the red one, it broke. But given that it has such strong bullish trend, would you think that this is a fake breakout? Could price actually have broken here but came back again? Happens quite some time, right? Like this is a common false breakout scenario that you will see very often, correct? So what this RSI or divergence shows you is that it preempts you that, hey, okay, it's a confirmation that, you know, we are gonna break. We're gonna go in a reversal trend. Okay, so it acts as a confirmation or additional support to your trade. Okay, so RSI broke the ascending support line before price did, right? It broke. This forecast that price might break it. So price is barely breaking out of the ascending support line, but shows strong recent bearish divergence, right? So one is going down and one is going up in the same alignment, same area. So here the price already broken out, but here hasn't. So it's suggesting, it's actually signaling you that a reversal might happen. So RSI breakout plus bearish divergence plus price breaking out equals to high probability. So it's equivalent to your Fibonacci confluence trading, right? 10% plus 20% plus 20%. That gives you actually 50%. Okay, with other indicators, maybe it'll give you an 80% confirmation that, hey, this trade might be good for reversals. Okay, and always take note that price tends to test where your divergence starts. So technically you should be about here. Or if you have other support levels like your overlapping support resistance or your swing high or swing low, it will be good that you can associate that and combine it together to make it a stronger take profit point. So right here is another example. Maybe 1 second. What's the setting for RSI? I'll answer that later on when I go to the live trading platform. Okay. Okay, so RSI breaking out of descending resistance right here. Okay, you can see that my price already broke out of my trend, but it's not so for my asset price, right? It broke on my oscillator RSI, but it didn't break here. So what happens? Do you guys want to have a clue, have a guess on what happened next? Okay, I have some answers. Price will that do? Okay, some say will reverse, some say that it will break the trend. Okay. Okay, so what happens next? Okay, so price is now testing the descending resistance line, and yeah, you must be wondering whether it will break. Should it break? Common question right at this moment will be, is my price gonna shoot up, or is it gonna break out or reversal, right? Breakout or reverse? Very common question at this point. This will be where all the commotions, all the fighting happens, right? So on my oscillator, it's actually showing me that, hey, my price has already broke out. And then it's showing me that I have a bullish, right? Because your price is drawn below, it's a bullish divergence. Okay, I have some answers. Pull back, then continue going up. But yeah, that's a common answer. Okay. But what happens? You see, it didn't pull back, right? I have an answer that says pull back to continue going up. Yes, that is common because price tends to, history tends to repeat itself, right? So it will create a lower low, and then maybe another lower low. But no, it didn't. It chose to break out, right? So remember on my first slide, which is for your regular divergence is for reversal. So R and R, reversal, regular divergence, and then your hidden divergence is for continuation. Okay. So right here, it chose to break out. Okay. So it has broken out of my trend in continuation of a bullish momentum, right? Okay, so let me go to show you guys some examples on the live charts. Okay, I will give you some examples on the, sorry, give me 1 second. Okay, so I'll give you some examples on the H4, the H1, and then on the daily, different examples of whether it's a exaggerated divergence, whether it's a hidden or regular, right? So you have some different examples to learn from. So this is the AUDUSD 4-hour chart. What I wanted to show you guys was, I think it's this. Wait, let me just adjust the colors. Okay, so what I wanted to show you guys is here, right? Your exaggerated divergence, it's not that strong, so your swings might not be that great, but I'm just showing you guys examples. And one more tip that I want to give you guys is that for this divergence trading, it takes a lot of practice because it's about spotting them, right? I can give you 100 charts, but if you can't spot them, there's no way that you can have this additional support, right? So if you want to learn it properly, I suggest that you go to your charts and just try to draw as many as possible, right? And at the same time, also remember whether it's a bullish or bearish, whether it's a regular or a hidden divergence. Okay, that will help. So right here, I have the exaggerated. When you draw below, it's bullish, correct? So you have your exaggerated divergence. So what it means here is for continuation, right? So from here to here, right here, you might be thinking whether it's a double or a triple bottom given the 4-hour. If you go to the 1 hour, it might be clearer. So for this exaggerated divergence, it's actually showing you that it will continue upwards, right? Okay. And then right here, let me just spot a couple of others. Okay, I think what I'm going to show you guys. Okay, maybe this might be a good example. Okay, so you might be wondering, right? Okay, always draw to the same segment. Okay, so you might be wondering whether it's going to break or it's gonna break this line, a breakout, or it's gonna reverse, right? Or is it gonna break out or continue in the bullish momentum? So right here, my oscillator is actually telling me that it's going downward, but right here is showing me a sort of double bottom. So for exaggerated divergence is always in continuation of where the trend is going. Okay, and then lastly, let me see. Okay, yeah, so my tip to you is also to spot, because sometimes it's not easy. Okay, let me try. Okay, from here to here, remember it's not 100% guarantee that it always works. Okay, but for example's sake, I'm just showing you guys what it is. Okay, so from the start to the end, right? So is this a regular or a hidden? Remember, for cut here. Okay, example purpose. Okay, so what will happen here is that you might be thinking, hey, actually I can even pull back further. Maybe here. All right, okay. Okay, this works. Okay, so remember when you're drawing at the bottom, you're looking at bullish. And then your question here will be, is my price gonna break this level here? Oops. Is my price gonna come down? Or is it gonna continue. Okay, so your first question to yourself is, hey, my oscillator is showing me a divergence trade, right? So at this point in time, you may actually pull out your other indicators like your retracement tool, okay, to see whether there is a nice confirmation on the level. For example, wow, this is a very nice level. Okay, so right here, there's a 127 level that we are looking at. This is the Fibonacci extension, right? A very nice reversal point here, in addition to our divergence trading skill tool, right? So what I can see here, I already take profit. Okay, so the other thing that I want to highlight is also, it tends to come back to where you start your divergence, right? So we started here, it should come back nicely there. It tends to, but if there is a strong support somewhere to actually give me the additional confirmation, that would be better. So what I can see here is that this zone might be where I take my profit for the reversal. So this is a regular divergence trade, right? Because it's reversal, right? It's reversing in the opposite direction. So I will have taken, oh, this is very nice. So it's also aligning together with my previous swing low about this zone, this green zone that I highlighted, right? So this is how we use divergence trading together with all our other tools in support to give you this fine-tuned take profit or stop loss levels, right? Because on its own, you can never have a entry point or a stop loss point, correct? Okay. So second example that I want to show you guys, maybe I show you guys, we only have about 5 minutes. So I will show you guys on a H1. So you guys have a different idea of how it's like on different time frames. Okay. So right here, okay, this is for example purpose. Okay, I have here. Here, I usually use my this line to show me exactly where my alignment should be. So if my trend line is this on my asset, then it will be here on my oscillator. So it's showing me that there is a continuation. So this is a hidden. This is a hidden divergence, right? Okay, so I have this few, even if it's a very little move, right? A very simple, a very small inclination, it's still considered, okay? So right here, you'll be thinking, oh, it's my trend, right? This is a live chart. So you might be thinking, hey, is my live chart gonna continue in a is my chart gonna continue in this bullish momentum? Right here, is it gonna break out? Is it gonna continue? So with all my other indicators like my Ichimoku cloud, my divergence trading tool, as well as maybe, let me try to see whether there is a level here, as well as my retracement tool. Let me see. Maybe price should continue to go to the 127 before it actually reverses, right? Because it's actually showing me that it's gonna continue in this trend. So at the back of my head, I will know that, hey, I'm looking at actually a potential continuation. So if I want to do a reverse trade, I would observe longer and then maybe take a reversal here, because right here I do not have much of a confirmation, right? Okay, I only have my Ichimoku cloud. I don't have an extension or a Fibonacci confluence area that I'm comfortable with, and especially there is a zone here. I might be taking note of this, right? This is a previous swing high which it failed to break, only at this area, but it pulled back. Okay, so this is a very dangerous area that I'll be watching out for. So what I'm trying to show here is that, okay, for this hidden divergence trading is actually showing you that it's continuation. Okay, this is on the 1 hour chart. So you can also spot divergence trading on 1 hour charts. Okay, I will try a last one. I think a good example would be, let me try. I'll try a daily. Okay, I'll try it on the daily chart to show you the difference. Okay, so daily charts is way much cleaner, but for if you're scalping or if you're a day trader, it might not work because it will take a long time. Okay, but it might be a better setup this way because it's cleaner. So right here you can see here and here, right? So this is a hidden divergence. Sorry, I mean this is a regular divergence, but this is a bearish divergence because your trend lines are drawn above, correct? Okay, so I start here and I stop here. So it has to be the same exact, right? So remember, if it's a regular divergence, your price tends to reverse, correct? So reverse to which point? It tends to reverse to where you start your divergence trading. So with that, maybe you can throw in your trend lines or your retracement levels. Okay, it'll be great if it aligns exactly or perfectly, but it doesn't happen all the time. It happens sometimes. Okay, it's just highlighting the zone for you to fine tune your take profit levels or stop loss. Okay, so this is the level that I'll be watching out for, right? If I will do a reversal trade here. Okay. I've come to the end of my session. I actually have quite a bit of examples that I want to share with you guys, but because of time constraint, I have another webinar to go to. I'll end this session here. If there's time, we can continue in the next session. Thank you guys for tuning in, and yeah, I'll see you guys in the next session.
Everyone, my name is Emily, and today I want us to pick up from where we left off. In this second video, you will learn about the advantages of trading CFDs as well as some of the possible disadvantages. Trading CFDs has several advantages. Traders can trade both long and short positions. This means that they can benefit from both rising and falling markets. Also, investors can trade using leverage, meaning that they can trade with a bigger amount than what they have initially deposited in their trading account. This may increase profits but also risk. Moreover, CFD trading allows for fast execution and low transaction costs. It also requires no physical delivery, which limits the risk of worrying about the asset. Last but not least, there are no day trading requirements. In fact, there is a variety of trading opportunities as brokers nowadays enable traders that are into diverse financial paths to trade CFDs as an alternative to exchanges. However, you should keep in mind that CFD owners have no voting rights as they don't own the asset. There is also some risk involved when trading with leverage. Both potential profits and losses are magnified. Also, the ease of access and low transaction costs may sometimes lead to overtrading. Some other disadvantages include the potential lack of liquidity and the need to maintain enough margin. Thank you so much for watching us today. Stay tuned for more videos. Bye-bye.